But let's continue getting those trading ideas to you. And now from Sameet Chavan of Angel Broking, as well as K. Subramaniam of Equity Advisory, who's an equity advisory at Altamount Capital. A very warm welcome to Traders 20 then. And Sameet, first to you, tell us which stocks do you like at this point of time and your rationale behind selecting those stocks?
Kamya, we have two buy candidates and one short recommendation in our list. Buy would be on SBI for a target of 258, stop loss 232. Since last 3-4 days, clearly PSU banks bucking the trend, though SBI trading around 239, 240, which is 1% lower today. But we believe that it could be a very good buying opportunity. There's a strong base around 232 for SBI. Looking at the daily as well as hourly chart structure, we expect this stock to move beyond 250. Hence, we have a target of 258. Our second pick would be to buy Century Textiles for a target of 545, and stop loss can be kept below 506. If you look at the daily chart structure, the stock is moving in a sideways trend wherein 560, 565 is a major hurdle on the upside, and low side there's a strong support around 500, 505. The stock is now trading around its lower end of the range, which is around 505, 510. Considering the hourly chart structure and looking at the positive placement of momentum oscillator, we expect this stock to perform well in next few days. Hence, with a target of 545, it can be bought at current level. And our final recommendation would be to short HPCL for a target of 715, and stop loss can be kept at 762. On Tuesday, we witnessed a sharp sell-off in HPCL with humongous volumes. The stock broke down from its major support level of 750, 755 on a closing basis. Since last couple of days, it's been moving sideways, but we believe that any bounce from current level would be a very good shorting opportunity for a target of 700, 710.
Okay, there you have it. Those are some of the top trades that Sameet Chavan is recommending. SBI Century on the buy radar, but it's a sell recommendation for HPCL. Let's also get in Krish Subramaniam, who joins in on the show. Krish, it's a very weak setup for the markets. It's been like this for the last week or month or so. What's the recommendation and what is it that you're advising here?
So broadly, we are recommending scripts which technically have shown some outperformance in the background of all this mayhem that we are seeing in the markets. So, and we are, to begin with, we are giving a buy call on TV today. Now, this has been a relative outperformer, of course, has also seen some decent correction. We did see some spike coming about on the Muhurat Day, and today's again going a bit soft. But considering the fact that it's been one of those outperforming stocks in the media pack, we feel that it could be bought for a possible target of 262, and one could keep a stop loss of 240. The second one is still Infosys, which has seen some very interested buying coming about at lower levels, and in the entire market meltdown that we have the broader market the last 7-8 months, this is one stock which has caught the attention of traders as well as investors. We feel that with the market as and when it improves, this should be one stock we should outperform. And keeping that in mind, this could be bought for a possible target of 65. One would keep a stop loss of 56. And the third one is a relatively safer stock in terms of its price resilience, where we have not seen much of volatility, but giving very steady returns, and that's Max India, which could be bought for a possible target of 540, but one could keep a stop loss of 512.
Okay, some trading ideas coming in from Subramaniam. Well, let's now shift focus to commodity space. Then Manisha Gupta, commodities editor, now joins in for a quick check on that space. Manisha, what's happening there?
Kavya, thank you so much for that. Well, the crude oil prices have continued to decline in the markets yet again. You have seen prices come off by 10% in the month of November. Some bit of a bargain buying coming in for the Brent crude prices, but the NYMEX is still nudging around those $41 mark. The US inventories have gained for a 7th straight week and 4 times more than what the street was estimating, and that really seems to be putting pressure on the prices. It's a similar case when it comes to the industrial commodities like base metals. They also have continued to be on the negative side. You have the copper prices trading at around 6-year lows. Aluminum and zinc also have been the laggards in the trade today. The Chinese data has been on the weaker side. If you look at the credit line, that's the lowest since 2010, and that really seems to be bothering this sector. The gold and silver prices then, while in the month of November, are still trading in the negative, but we did see some bargain buying coming in on the lower side. The gold prices continue to trade below $1,100. That's really nearly a 5-year lows for the gold prices, and the silver as well is trading at 2.5-month lows. Markets continue to watch out for the cues from the US dollar, which is the highest in a decade, and of course it's now a few days away from the December 15-16 Fed meeting. Ahead of that, most of these asset classes are expected to be choppy. But let's get in Harish Ji with his strategies on the commodity sector today. Harish, hi, welcome. How are you looking at the gold prices? Because the physical buying in the US and Indian markets definitely seems to have picked up. How are you trading it today?
We have seen both gold and silver extending their downward trend, and we have seen gold testing its July lows of $1,073-$74 area. So I think the overall sentiment is quite weak, and selling on rallies is what it is advised in short term. Also, the dollar strength and weak demand dynamics are weighing on the prices. So, as far as short-term strategy is concerned, we prefer selling gold somewhere around 25,475-500 kind of levels for a target of 25,100, and stops can be maintained above 25,650.
A sudden pressure is back in crude oil prices. Where do you see a support coming in for that, and how are you trading that one?
And crude oil, yesterday's inventory report has resulted in heavy selling, and this follow-through selling is what we are anticipating for the day. So one can sell somewhere around 2,790, 2,800 kind of levels in crude November contract for a target of 2,700 on lower side. As far as stops are concerned, one can maintain stop loss about 2,850.
All right, Harish, we'll let you go at that. That's the view then coming in from JRG. They have a couple of sell calls for the day today in gold and crude, both those commodities on the shorter side. With that, it's back to you guys.
Thanks very much, Manisha, for highlighting some of those top trades as well as strategies from the commodities space. And a very important disclaimer that we'd like to tell our viewers that if you're taking any advice, you should consult your financial advisor. Many thanks then to our 6 equity guests for being with us on Traders 20 and sharing your top picks. On that note, we'll take a quick break right here on the show, but we've got lots more lined up on the other side. Our guests are lined up on BNS and the stock game to share their top strategies.